Good afternoon, good evening. Thank you for joining me for this mini class. My name is Milan Levis. I'm a financial empowerment mentor for women, entrepreneur, investor, and best-selling author. Today, I want to offer you another mini class where I would like to share with you some research that I found that shows the differences in gender approach. The differences that men and women have when it comes to investing money. But before we go there, I want to first of all say Happy Valentine's Day. I hope you enjoy today, and whether you are in a romantic relationship or not. This is a great occasion to show yourself some self-love and maybe have some piece of dark chocolate or a glass of wine. I always like to say that self-love is the engine to success in life. So I hope you will find some occasion to nurture yourself, to have some me time. So I just wanted to say again, Happy Valentine's Day. Now, yesterday in the mini class that we had, I talked about relationship between partners and how the differences in their attitude, in their approach to managing money, to investing, how can they find the common ground when it comes to challenging conversations, money talks, right? So I just want to have a brief overview. So we talked about number one important takeaway was communicate. You must communicate whether it's comfortable or not comfortable. Keeping secrets inside is very unhealthy, not only for the relationship, but also for you. Hi, Gina. Thank you for joining me. Also for you, for your health. So it's very good idea to develop this this practice and habit in your relationship, to have candid conversations, maybe other topics, but especially about money, because this is something, this is the indicator of, how open and how connected you are to each other in the partnership. And also, it's a good idea to discuss maybe your future and see what kind of lifestyle you would like to have, when you get older, and, what kind of returns you would need to have from your investments if you want to develop this plan, whether you want to become financially free before you retire or just have a solid retirement plan, so you know what is the cost of your lifestyle and how much you need to save and invest, what kind of rate of return you would need to have in order to fill this gap. So that's number one. Again, communicate, communicate, communicate. I cannot say, emphasize more how important it is. And I know it's not always comfortable for some couples, but you need to find a way to feel confident and candid with your partner about things that concern you. So the second item that we discussed yesterday was compromise. You and your partner may be coming from very different backgrounds, have different money story, have different relationship with money, different attitude toward money management. Maybe one of you is more of a saver type, and another one more of a spender time. So you need to find some common ground. And to do that, I think it's important to listen to your partner and really hear what he or she wants to convey to you, why he or she feels that certain things need to be done certain way, and then find a way to express your opinion. It doesn't mean that you compromise. It doesn't mean that you have to accept everything that another person says. You can find a way to solve maybe your differences without, you know, getting into fights and, you know, creating more friction. If, for example, if he wants to expand his business and you prefer to invest in the stock market, maybe you could find a compromise where part of the family money could go to expanding the business and part could go to investing in the stock market. You don't need to put all your family money in one basket. So anyhow, that was the second point that I shared with you yesterday. Compromise is important as long as it doesn't involve compromising on your core values. Your core values, you know, for example, for me, my core value is freedom. For maybe other women, it's staying home with kids when they're young. So if it's something that is so important to you that you're willing to, you know, stand by this value, and you're willing to sacrifice, you know, maybe certain career aspirations because you want to raise your children, you know, when they're still young, and be with them, and, you know, give them all your attention. If that's your core value, then don't compromise on this. That's what I want to say. Compromise is great. Any relationship needs to have some level of compromise. But if it's your core value, do not compromise on this. And for example, I know some women, for example, they really want to have children, but the husband doesn't want to have a child. So if it's your core value, don't compromise. Maybe, you know, to the point that maybe this is not the right man for you if having a child is your core value, or if staying with your young children is your core value, but your husband insists that you go and work so you will have second income. So don't compromise on your core values. Another point that I brought up yesterday was that it's important to dream together. So usually couples only discuss bills and money concerns and debt, etc. And, you know, this is something that obviously needs to be discussed. But hi, Nakesha. But on the other hand, it's also important to have a joint vision, common vision, where you could dream together, something that will motivate and inspire both of you. So I think it is, you know, this it's like you get motivated by a positive goal, by a positive vision, and that could help couples to become closer instead of, you know, having money as a kind of like a source of division. So that was also very important, that I wanted to remind you what we covered yesterday. And the last point was a lot of women don't feel confident when it comes to managing money or investing money, and because of this, they often delegate everything to their partner, and you know, they feel that it's just not for them. And God forbid something happens in life, and you know, you don't have this partner with you anymore, and then you feel scared and devastated. So I always like to say that it's important to be financially empowered, so you could have a equal discussion with your partner about you know, family money and what you need to do with this and how to plan it and how to invest this. So you know, that's my passion. That's why I'm doing what I'm doing, because I want to empower women to feel that they are absolutely capable to manage their money and invest and grow, and feel confident that no matter what, they can support themselves and their family. Okay, so that was just a brief review of the mini class yesterday. Let me see if I have any questions. So Gina says, I agree, it's so important to communicate on money issues in your relationship. It can break it if you don't. Thank you for your wisdom on this issue. Thank you so much, Gina, for your comment. I totally agree. So as I mentioned today, I want to continue to build on what we just discussed. And I want to talk to you about differences that actually men and women have in their approach to investing. Because I'm a financial empowerment mentor for women, I actually decided that to research further what is the difference, why so many men feel so confident, you know, managing money and kind of have traditional role of money managers in the family, and women kind of take a passenger seat often. So I did some research, and it's actually been found that there is a gender differences in approach to managing money and investing. And what is interesting, there is actually like 3 categories that these differences can be ordered by, right? So the fact that women have a different approach to investing and managing money doesn't mean that they are inferior to you know, being good investors. And that's what I want to share with you. That's the goal, or that's the message that I want to convey. The differences in gender approach to investing doesn't mean that women can not be successful investors, just the opposite. So the first, so there are 3 major aspects in these differences. One is risk tolerance, right? Risk tolerance or risk aversion. The second one is confidence about abilities to be successful. And the third one is preferences. Preferences in terms of what to invest in, how to invest. So let's start with the number 1, risk. So women are generally more risk averse. They prefer to take less risk in their approach to investing, as a general rule. And possibly because they sometimes maybe they don't really realize the extent of the gains that they, you know, particular investment may bring, or it could be that you know, we live longer. We kind of like women need women's concern for financial security is much higher than men. So because we like to feel that we have financial security, we tend to be more cautious with our investing. We weigh more on, you know, maybe what we can lose potentially, instead of just, you know, focusing on what potential gains can come from a particular investment opportunity. So, and women tend to live longer, right? So we also want to make sure that whatever nest, a golden nest we build, that it will last longer. So definitely women have a tendency to be more, you know, to weigh on more on the safety side versus taking more risk. And there are 2, you know, as everything has pro and cons. So the positive in this is that, you know, we maybe don't jump into some risky opportunities without doing more research. At least it's the case in my family. But at the same time, every investment has inherent risk. So sometimes it's important to, you know, take calculated risk. Otherwise, you may just miss out on some opportunities if you want to grow your money and invest. So I think that that's why, you know, when I teach, when I work with my clients, I like to emphasize that you need to be strategic investor. You need to understand the big picture, not only, you know, like I want to buy Bitcoin or I want to buy real estate. You need to see the big picture of your goals and what kind of portfolio will fulfill these goals. So, and that includes knowledge about managing risk. So that's what I wanted to mention about difference in risk tolerance between men and women. So the next difference is confidence. For whatever reason, even when women actually know about particular investment, they still feel that maybe they don't know enough. You know, this not enough thing come into play again. So women often less confident about their investment abilities than men. Men, on the other hand, often overly confident. They're so confident they trade. You know, women tend to be investors, not traders. Like, you know, they invest and they adjust the investments maybe, you know, once a year or something like that. They don't trade like daily or, you know, don't use other kind of more advanced form of investing and trading. But men usually overly confident, and that leads to you know, trading more and sometimes you know, experiencing higher losses. So it's a double-edged sword, right? So on one hand, it's good to be confident, like men are, but maybe over confidence is not very healthy when it comes to investment, because you need to really you know, see bigger picture again, and not to be you know, impulsive when it comes to investing. You need to like keep your cool. So women have advantage in one way here, because they don't you know, they don't like to trade often. Most women, again, I'm talking about general examples, but at the same time, I think confidence is important in every kind of aspect of life, and to you know, to become what I call become financially empowered, become informed investor. Learn about different investing strategies, you know, whether it's stock market or real estate, or, you know, what else you can leverage, maybe buying a business, maybe building a business, learning, you know, about what you can do to grow your wealth is a very good tool to grow your confidence and competence, right? So that was the second difference, confidence between men and women attitude toward investing. So the next one is preference. I think it was preference. Yes. So women, they like to invest in something that is allows them to preserve their capital, preserve the investment. So they would be okay with a smaller return on the investment, but more safe return. On the other hand, men, they like more aggressive investing. They, you know, they're willing to take risk if the return on the investment promising higher, you know, higher numbers. So this is very important to know, because you know, if in the family you have you know, pronounced differences that I just described in terms of where do you want to put your money in what investment. It's also called asset allocation. For example, you know, maybe husband wants to put most of the family money in business, and you know, if something happens to the business, you know, it's a disaster for the family. And maybe women want to have some portion of the money allocated in something that may be less risky, maybe or just, you know, just diversify. Diversification itself is a tool of risk management. So if they don't want to put all money in one basket, and maybe they want to have their own business, their own income, where maybe it's a job, or maybe it's investing in rental real estate, I think it's a good balance, right? So you could use this differences, like, for example, right now I'm talking about preferences in safer investment and more risky investment. You can use these differences to balance if your partner is very different, has very different approach to how to invest your family money than you do. So again, in general, just to summarize this, women often, because they lack confidence or they lack maybe experience, and maybe because they more risk averse than men, they tend to be very cautious with the investing. They often keep cash on the side, and they're afraid to invest this money. So what I'm saying is that it needs to be kind of more balanced approach. You always need to have a safety net. I call it emergency fund, right? For 3 to 6 months, it's a good idea to have something in case family finances situation will change, and you need to allow yourself a little bit of buffer to find another income opportunity. But at the same time, you want to develop a pathway to either financial freedom or comfortable retirement. So to do that, just keeping cash in the bank, it's not enough. Portion of your money should be maybe in cash, but not all of your money, because you want to expand it, right? And with the interest rate that we have right now in the banks, it's impossible to become wealthy just if you keep all your money in the bank. So that's why I like to help women become financially confident and feel more empowered with the knowledge, with the experience, and ability to see bigger picture, and become really confident partner when it comes to talking money with your partner. So that's what I wanted to share with you today in this mini class. I hope you have some takeaways. I would love to see your comments below this video. If you have any questions, feel free to ask me as well. And one more thing, I want to tell you that today is Valentine's Day, and I decided to offer you a free download of my best-selling book, A Shift Toward Abundance: Secrets to Financial Freedom. So this book has tons of practical, specific information, as well as more integrative approach to money and wealth. It has spiritual aspect of money as well as practical and strategic aspect of money. So I invite you to take advantage of this opportunity and download this book from Amazon. It would be Kindle version, and you will also, once you get the book, you will also have a link to where you can get the audiobook version of this book. So I hope it would be very useful to you on your journey to wealth and financial independence. And again, thank you very much for taking time to watch this video, to spend some time with me today. Happy Valentine's Day, and I will see you again tomorrow. Thank you. Happy Valentine's Day.